All right, welcome everyone to the series on price channels. In this video, we're going to be taking a look at conceptually what a channel is, and then we're going to hop in the charts. I'm going to show you what they actually look like in the market. So this is going to be kind of a foundational video for price channels, something that you can continue to build on and all of the other trainings, and then of course with your own experience. So let's hop out of the markets for a second. All right, so before we talk about channels, let's talk about a little bit conceptually what makes up a channel. So there is an idea, and you should have already learned this in the education platform, but there are resistances in the market, and then there are supports in the market. So let's go ahead and get these identified here. So we're going to, here's our resistance in the market. Pull this through right here, and then here is our, just clone this here, bring it down. Here is our support right here. So this is our support. Now, how does price move between support and resistance? Well, price, the idea is that price reacts from support and resistance. So resistance will hold price, and then support will hold price, and so price just continues to bounce back and forth. That's the general concept of support and resistance. Now, not only is there horizontal support and resistance, so right here in front of us we're looking specifically at horizontal support and resistance. That's what we see on the screen right here in front of us. Now, there is also, let's pull up here, there is also diagonal support and resistance. So what is diagonal support and resistance? Well, it's pretty much the same exact thing. So here's our diagonal support and resistance. And in the case of an uptrend, we know that our diagonal support and resistance, we mark our support typically like so. So in this case, it is acting as diagonal support. Now in the case of a downtrend, let's go ahead and move over here. In the case of a downtrend, so price is moving down, we will have our trend line, our diagonal resistance marked. So here's our diagonal resistance. All right, so and these concepts here, they work the exact same as horizontal support and resistance. And overall, we have this concept in our minds that in the market, price is simply moving between different types of support and resistance. So, brings us back to the question, what are price channels? Well, put real simply, price channels are simply just diagonal support and resistance combined together. So, over here on the left-hand side, when we're looking at our downtrend, we have our diagonal resistance marked. A channel will also have us, let's go ahead and clone this, a channel will also have us mark the support in our downtrend. And then all of a sudden now, we no longer have just a trend line, we have a channel. Similarly over here on the right-hand side, so we have our diagonal support marked here on our uptrend. The channel will look like this. We'll clone it and we'll bring it to the other side, and now we have our resistance marked. Now, if you recall, when we discussed trend lines previously in the platform, we talked about how these opposite trend lines on the other side of price aren't as important as the ones that we're marking. So for example, right here, this trend line is much more important than this support down here, because this trend line up here is what tells us when the market is reversing. And that still holds true for channels. So in this case, this trend line right here, or this boundary in price right here, is more important than its counterpart here, making up the channel, because it tells us when price is going to reverse. Now, there is a channel tool on TradingView and on MT4, and it's right here. So in the channel tool, the way we use it is we draw our trend line, just like we normally would, but then when we click, it allows us to pull over a parallel trend line, which we can then use to draw our overall channel. Now, this is important because the textbook way to draw a channel is to draw a parallel trend line to the one that you've already identified. So that's a key characteristic. They are completely parallel. And then this dotted line right here that goes through the middle, that is the 50% line, the halfway point, and that typically acts as a smaller diagonal support and resistance, but not really important for the concept in this video. What's important in this video is that you understand the boundaries that make up a channel, what they actually are. They're just parallel trend lines that act as support and resistance. So now in our downtrend, not only are we marking our diagonal resistance, we are identifying a diagonal support. Here in our uptrend over here, not only are we marking the diagonal support, we are marking the diagonal resistance. All right, and thus we form our channel. So let's shoot over to the market and let's identify some price channels. All right, so I've got us pulled up here on USD CAD on the 1 hour time frame, and we're gonna just take a look at some textbook price channels. So originally, if you're looking at this chart, as a beginner, you're thinking, okay, here's a trend line. You're going to be looking at this reaction here and this reaction here. And then you're going to note, of course, in the end that price will breach, retest, hold as resistance, right? But you don't have that identified until after the fact. So originally what you're looking at is this reaction point and this reaction point. Now, what is the channel going to be for this? Because every trend line will have a channel. So let's duplicate this, and then let's pull it across to the other side. So what are we looking at on the other side? Well, where's our resistance? Here, 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 and here. Okay? And if you pull this back, like so, you'll find that it was also previously acting as support. So this trend line right here is our parallel for this trend line down here. See how that works? And then this right here, all together, this is our bullish channel. All right, because it's a bullish channel, it is an ascending channel. So you may also hear us use the term ascending, which simply means rising or going up. And that's the channel. And so another way you can draw this here is you can get the channel tool right here, draw the bottom down here, the original trend line, and then just pull it across to connect this original peak right here. And it'll give you the channel and extend it out for you nice and perfectly. And then of course you can see a little bit of interaction. Let me get this right here, a little bit of reaction here around this 50% level that takes place throughout the channel. See these reactions here. So it's a little bit of a diagonal support and resistance. Again, not too important, just want to point it out for completeness. So that's kind of how the channel works. And let's look at another example here. So we're going to look at a bearish channel now. So we've got this peak up here, right? And we've got this peak right here. And then let's connect it with a trend line like so. And then let's duplicate this. So let's clone this, pull our parallel trend line down over here. So we're looking at this original valley right here, this low in the market. And then look at that. Price comes back to our channel support later on, finds support and bounces back up. And again, if you pull this parallel trend line back, you'll see that it was previously acting as resistance. So resistance turned to support. This is our parallel for our original trend line. So again, channel tool, pull it across the peaks as you would initially draw your trend line, and then pull this across like so, and then voila, here is your price channel. Pull this through here. Here is your price channel. And then you can just continue to do this with your channel tool for all of your price channels, like so. Pull this back. All right. So these are how channels are drawn and what they look like in the actual market. Now let's pull back out of the market to discuss another key concept for channels. All right, so we're back here at our initial recall of horizontal support and resistance. And again, don't worry if you're not comfortable identifying, drawing the channels in the actual markets yet. That segment was just designed to give you an idea of how they're drawn and what they look like. There will be other sections where we discuss in further detail how to actually spot them and draw them. So remember, this is just a conceptual understanding video. So back to this example right here, we talk about the key concept, which is that price moves between support and resistance, horizontal support and resistance in the financial markets. Now, something really important to build on this. Not only does price always move between horizontal support and resistance levels, as price is moving between those levels, price moves in a specific trend in between. And let's go ahead and make this white here. Price moves in a specific trend between these levels. It moves in a trend between these levels, in a trend, in a trend. You see how this works? So if price is moving within a trend, a specific trend each time, then we can say that price is moving in specific channels each time. So here we go, moving back and forth right here in between our support and resistance in specific price channels. And let's go ahead and add another level here. Another level, put that right up here. This is also going to be a resistance. So put that right up here since price is down here. And let's pull price back down here for this example. So price moves between different support and resistance levels in channels. All right, so in this example, price moved in a channel all the way to that resistance level up there. So it went through this one in the middle and went on to the next one before it ultimately changed its price channel and began to head down. But the concept here, the key concept to understand is that the market's moving, yes, between horizontal support and resistance levels in the market, but the price moves between those levels in specific waves, in specific tracks. Price follows specific tracks in between these levels, kind of like train tracks in between train stations. So the key here is to first identify the train stations, identify the support and resistance levels in the market. The next important key is to identify the current price channel, the tracks in which price is moving in between those horizontal support and resistance levels. So now let's go back into the markets and take a look at that. All right, so I've got us back here on USD CAD. This time we're on the 4-hour time frame. And so what I'm going to do is I'm going to go ahead and mark our resistance level up here. So this is our resistance level in the market. And then let's go ahead and mark our support as well. So our support right about here. That's where I like it. Okay, so just to be clear here, let's zoom in, see what we're looking at. So the first thing we're looking at is this peak and this peak, and then we're looking at resistance, resistance, support, support, all right, support again. So definitely by, this time in the markets, you should have an idea of where your S&R are right here in this area. So with that being said, let's talk about how price is moving between these two support and resistance levels. So by the way, it looks like there is also an important level down here. Okay, so let's talk about this. So if you notice right off the bat, price was moving in a specific trend right here. So let's zoom in on this. You can see, let's see, we've got this area right here reacted on it. This area right here reacted on it. Let me pull this through just a little bit. You can see right there. All right, and then price reacted right here. And then again right here. So this was our trend line, our bullish trend line coming up. Now let's duplicate this and let's look at the other side. So here we are right here. Here's the other side of our channel. And you can pull it through and see how price was originally finding support at this trend line, and then of course found resistance up here. So here's the other side of this channel, and now what I'm going to do is I'm going to get rid of these and use the channel tool here. to our channel tool, pull it through like so, pull it to the other side, and voila. Let's go ahead and pull it all the way through here. So price moved in a channel down here. All right, so let's go ahead and call this one station 1. So station 1. Call this one station 2, and then call this one station 3. All right, that'll help simplify what's going on here. So price moved all the way from station 1 in this channel all the way to station 3 in this channel. And then once it hit station 3, what happened? Our channel broke. So right here, our channel broke. And when that channel broke, we formed a new price channel. And then here's what the new price channel looks like right here. Okay, and then we'll clone this, pull it to the other side, and voila, here's our next channel. So get rid of these here and use the channel tool. Something like this, pull it through, and then we'll pull it back. Here was our next price channel. All right, nice and tidy up. And then that next price channel carried on until when? It carried on until we hit station 2, right here. So it carried on until right here when we hit station 2. All right, now this channel is going to break right over here after we hit station 2, and we're going to form a new channel. The new channel looks like this. Now this channel didn't make it all the way up to station 3. Why did it not make it all the way up to station 3? Because we have a minor support and resistance area that has formed right in this area, as you can see. All right, so what actually happened is price did move between the support to the next resistance, but this is the next major resistance. It moved to the next minor resistance, okay, which can happen sometimes. It's okay. Notice how what happens then is price forms a new channel, comes on down to the support, and then we form a new channel that comes on up to the resistance like so. All right, and then we move in a new channel, which is really, it's not like an actual channel where you have a bunch of bounces, but it's a new price movement. It's a new flow of price. Went straight down to our support. We moved from our support to our resistance, like so. I'm going to pull this through. So like so, that was our next channel, or you could have even used the steeper channel that price went in from. So pull this back. Yeah, it looks like that. Let's go ahead and use that one. Easier for this explanation. It's moving in this price channel from the support to the resistance, and then as it continues to do, breaks that channel once it's hit the next station. All right, so now we've got this channel over here. So moving from our resistance all the way through down to our major support down there, okay? And what are the boundaries that we're looking at? We're looking right here, right here, right here, right here. We're looking right here, okay? Getting these channel boundaries, and again, seeing how it moved all the way from station 3 down to station 1, and we'll continue on to a new SNR somewhere down below. But if you notice here, price is moving in between these stations in these specific channels. And what you're going to find is that this is actually one of the ways that you're able to determine whether or not a specific support or resistance, specifically the horizontal support and resistance levels in the market, is going to be the level that ultimately holds price. Because as you see, for example, over here, so right over here in this area, notice how price never did breach, retest, and continue on to form a new channel. Price remained in the channel, and therefore price continued to go to the downside, moving on to the next station. Whereas in every other instance, for instance, over here on the left, when we hit this resistance here and it was holding, and we're trying to figure out if price is going to break this resistance and continue on, or if price is going to reverse from this level, it's right here when this channel breaches that we get extra confluence that, okay, our price channel has ended. Therefore, we should be seeing a new price channel form down to at least the very next station. Again, when we get down here to station 2, we're wondering if it's ultimately going to hold or if price is going to go to the top of our channel and then break through, retest, and continue on. What happens? Price breaches the channel, retest, and it's at this point that you know that we should see price form a new channel up to the next resistance, which is exactly what it does. And of course, ultimately, as you see, it goes up to the next major resistance. It happens every single time like this. Price is moving between horizontal levels, price points in the market, and it's doing so in specific price channels. And this is because for each given move in the market from one price point to another, you have specific large players, specific institutional investors that are causing these moves, and they each have different order criteria, and you can see the difference in their order criteria in the way that price moves differently. For example, let's call this institutional player number 1. Institutional player number 1 just dumped his entire order right here at, what is this level? Probably what's it next to up here? 1.290. So 1.290. He just dumped his entire order at 1.290. Price just flew down to station 2. Okay, but over here on the left, institutional player number 2. So institutional player number 2 didn't do that. He put in a specific order for a specific amount, say like 10 million, and then he filled another, let's say 30 million right here when price came back to his level that he wanted. And then he put in the rest of his order at a discount rate right here at the channel resistance, and then ultimately his order finished down here. Institutional player number 3 right in here. So institutional player number 3 right here, his order flow was different as well. So he entered down here, let's see, what is this? About 1.267, so 1.267 right in that area. So when he filled his orders, let's get rid of these yellow lines real quick. So zoom in here. When he filled his orders, he came in, maybe he originally dumped, 10 million into the market, and then he kept getting in on these retracement levels. So he got a 60% discount for his next 10 million, a 60% discount for his next 10 million, a 60% discount for his next 10 million, and then all of his orders were done right here. As you can see, because price ultimately breached this trend line, breached this channel support, and continued on in a new direction, meaning that his orders specifically were done. And then institutional player number 4 also came in at this level. He had a different flow of orders as well. So the key here, the key understanding is, whether that makes sense to you or not at this point in your trading journey, is to understand one simple concept here, okay? Price channels are 2 trend lines parallel to each other, showing you diagonal support and resistance for price at any given time. And the market, which is always moving between different types of support and resistance, moves between horizontal support and resistance levels in specific price channels.